One of the very first money books I read when I first started my bookkeeping business was Profit First by Mike Michalowicz. And let me just say that it was a game changer in how I manage the cash flow in my business. And if you haven't read the book, I highly recommend it. I will link it below in the show notes if you are interested in checking it out. But if you have read it, you probably noticed that it doesn't quite work the same if you have an inventory-based business. So whether you've read it or not, today, I am here to tell you the basics of how the Profits First system works and how you can use it to help manage the cash in your retail business. Let's dive in. Hey there, and welcome to the Boutique Bookkeeper Show, where we take the mystery out of your money and make your numbers make sense. I'm Megan, virtual bookkeeper and bookkeeping coach, and I love helping female boutique owners just like you finally feel confident about the financial side of your business. If you're tired of feeling anxious every time you have to open QuickBooks, or if you're making sales but constantly left wondering, where did all that money go? You're in the right place. We'll cover all things bookkeeping and taxes, all in plain English, so you can be less intimidated by the numbers and finally start to use them to help you grow a profitable boutique. So, if you're ready to stop avoiding this whole numbers thing and start keeping more of the money you make, grab your coffee and your calculator and let's dive in. Hello and welcome to another episode of the Boutique Bookkeeper Show. I'm Megan, and today we are going to be talking about the Profit First method. And as I mentioned earlier, I read the book Profit First when I was first starting my bookkeeping business back in 2021. And to be totally honest, it was even before I had my first paying client. But after reading it, I made the commitment that I was going to start utilizing this Profit First framework in my business from the very first dollar that I made, and I am so glad that I did that. So the idea of Profit First is just what the name suggests. It's prioritizing your profit. It's making sure that you're setting some of the money aside that you make to guarantee that you make a profit and you don't just spend it all and reinvest it all back in the business. Who's been guilty of that? So in the book, Mike talks about, it's called Parkinson's Law, which is this idea that the more that's available, the more that's consumed. You know that diet tip about eating on smaller plates? Well, it's the same concept, only talking about your money. And if you're moving your profit into a different bank account, and maybe an account that's at a totally separate bank, you're not going to see that money, so your mind won't be tempted to spend it and think that that money is available for use. So that's kind of the psychology behind this method, but in the rest of the episode, I'm going to cover actually how to follow this method in your business to help protect your cash flow and ultimately to ensure that you are always making a profit and paying yourself something for all of your hard work. I'm also going to preface this episode by saying that I am not a Profit First professional. There is a training curriculum that the Mike Michalowicz company puts out so people can go through his more in-depth training and actually call themselves Profit First professionals. I have not taken any of those courses, so the information that I am sharing is simply information that I have learned myself by reading the book and helping some of my clients and myself kind of customize this method to fit our own businesses. So with all of that out of the way, first we're going to talk about kind of what the core of the Profit First system is. So the Profit First system is built around having 5 primary checking accounts and 2 what I'll call optional savings accounts. And if you're a product-based business, I'm also going to introduce a 6th checking account here right off the bat. And I'm going to tell you how you'll be moving money between these accounts in just a minute. But for start, let's just look at each account and the purpose of it in greater detail here. So first, you're going to start with an income checking account. This is the checking account that you will have connected to all of the payment processors that you use. So that means that all of your Shopify, PayPal, Sezzle, all of your cash deposits, they're going to be made directly into this income account and only into this income account. So just like the name suggests, this income account collects all of your income. The second checking account is your operating expense account, or what I like to call it, the OPEX account. So this is the checking account that you will pay for all of your operating expenses out of, such as payroll, rent, supplies, advertising. Every bill that you pay out, with the exception of inventory, needs to be paid from this account. The third checking account is going to be your tax checking account. And this is the checking account that you will be using to set aside some of your cash flow each month to save for income taxes. So a lot of people, when they first start a business, they might be surprised at the amount of taxes that they have to pay on their profits at the end of the year. A huge chunk of that is going to be self-employment tax. So as a bookkeeper, what I often recommend that my clients do is plan to have to pay up to 30% of your profits every year in income taxes. And if you're not saving that throughout the year, when that tax bill comes, it can be kind of a gut punch. So I always recommend setting aside some money into a separate tax checking account. And this is also where one of the optional savings account comes into play. It might be real tempting if you see your tax checking account at the same bank where you're paying your bills out of. So if you're really going to be tempted seeing that tax checking account balance grow throughout the year, you might be tempted to tap into it. Open a separate savings account at a totally separate bank and transfer the funds from your tax checking account over to the tax savings account at a different bank so it's out of sight, out of mind. But I like to call that savings account optional. You know your personality better than everyone. So are you going to be tempted to tap into that tax checking account? If not, it's okay to not have that tax savings account, but if you know that you're going to be real tempted once maybe cash flows get a little tight, then maybe move it to the separate savings account so it is out of sight, out of mind. The fourth checking account is going to be your owner's pay account. So depending on your entity type, this may be an unnecessary account, but I'm still going to touch on it here because this is how he lays it out in the book. So this account is meant to collect a portion of your income that you will eventually pay to yourself as the business owner. But if you are a sole proprietor or a single member LLC, I say this account isn't really needed because whatever percentage you allocate to paying yourself, you can just go ahead and transfer that amount from your income account directly to your own personal checking account. You don't necessarily need this owner's pay checking account to hold the balance for a day before transferring it to yourself. However, if you're taxed as an S Corp and you need to pay yourself on payroll, this account may be necessary and may be helpful for you to be setting aside the wages that you are going to be paying yourself on a future payroll. So if you need more information on how your entity type affects how you pay yourself, I will link to a previous blog post that I have done, so you can read that for more information. All right, the fifth checking account is the profit checking account. So this is the checking account that you will be using to set aside some of your cash flow each month to help you save for a rainy day. And this is also the account that you will use to guarantee that you always earn a profit. It is that profit first concept. So the age-old formula of income minus expenses equals your profit is kind of flipped on its head using this method. So instead, you get your income minus your profit, which you're setting aside in a different bank account, equals your expenses. And then from that, you allocate the rest of the money you've earned to paying yourself, paying your expenses, and saving for taxes. And just like with the tax savings account, if you know that you're going to be tempted to tap into this rainy day fund when it's nice and sunny outside, then you may want to consider transferring this balance to a completely separate savings account at a different bank as well. Again, out of sight, out of mind. All right, and then finally, the sixth checking account that I mentioned that isn't necessarily mentioned in the book, but it's something that I recommend for product-based businesses, is known as the inventory checking account, because obviously inventory is a huge part of your business. It is a huge cash flow. You have a lot of cash flow going to replenish inventory. So I love the idea of having a totally separate bank account to help protect your inventory dollars. And just a little pro tip here as well. If you use credit cards in your business and you want to use profit first, I highly recommend that you have a credit card that you use specifically for inventory purchases as well. And then anytime you have to pay that card, you use the funds in your inventory checking account to pay off the inventory credit card. And then on the flip side, have one credit card for OPEX, and then you use the OPEX account to pay for that credit card. So just a little extra tip there for you guys. All right, so now that we've covered the different bank accounts, let's talk about how all of the money moves between them. So I already touched on the first step, and that is to make sure that all of the money coming into your business is deposited into the income account. Now, the book talks about making these transfers, or what they call allocations, twice a month on the 10th and the 25th. However, in the retail industry, I actually recommend doing them more frequently, as you're probably buying inventory more frequently. So I generally recommend that if you are going to be using Profit First in your business, I recommend making these transfers every week. I recommend doing them on Monday as part of kind of your Money Monday process. So every Monday, you will look at the total balance in your income account, and the first thing you're going to do is protect your inventory dollars. So that means that you are going to look at what your true cost of goods sold is. So the cost of the inventory that you sold in the prior week, Sunday through Saturday. Again, not what you bought, it's the cost of the inventory that you sold in that time period. And you are going to pull that amount out of your income account and you are going to transfer it into your inventory account. So the purpose of this is to essentially be able to replenish the inventory that you just sold. And if your business is really going through a season of growth or anticipated growth, you may want to increase that amount by a certain percentage as well. So let's just say that your cost of goods sold last week was $1,000, but year to date, your sales are up 5%. Then maybe you want to add 5% to that $1,000, so $1,050. So it's best to look at kind of your own sales trends to help make this decision. But really the purpose is you want to be able to set money aside so you can easily replenish the inventory you sell. Because obviously if you can't buy more inventory, your sales are going to go down because there's no products for your customers to buy, and that's bad. So once you've transferred your inventory dollars to your inventory account, the remaining balance in your income account is going to be transferred to the remaining 4 accounts: the profit accounts, the OPEX account, tax account, and the owner's pay accounts. And these are the checking accounts. And you are going to transfer those amounts based on a predetermined percentage. And I'll talk about that in just a minute. But if you want a spreadsheet template that will help you kind of make all of these calculations every week, I'll link one down below in the show notes. It's a very simple spreadsheet, but if you just don't have the bandwidth to even create something like that, you can just grab my free copy down in the show notes. And then once you're done making all of these transfers, you should be left with $0 in your income account, and you will see the funds available in all of the other accounts that essentially act as a very rough budget for your cash flow. And then every quarter, there are a couple extra steps to take, but that is kind of your process, what you will do every week. And then the first part of every quarter, first, if you're required to pay quarterly estimated tax payments, you get to use the funds that you've already set aside in your tax account or your tax savings account to make that payment. And if you're not sure if you're supposed to be making estimated tax payments, please make sure to talk with a tax professional. The next thing that you get to do every quarter is you get to take a look at what you've set aside in your profit account, and you get to pay yourself a nice little quarterly bonus. The book recommends taking out 50% of what you've set aside and keeping that extra 50% there as kind of that rainy day fund. The only rule to this is that you cannot reinvest, I say this with air quotes, the money back into the business, okay? The money is meant for you. It is meant to pay you for all of the hard work that you've been pouring into your business, and the remaining 50% balance will continue to remain there. And like I said, it's acting as kind of a rainy day fund for the upcoming quarter. All right, so how do you actually go about implementing this Profit First system in your business? So first things first, you need to go and open all of those necessary bank accounts. No exception. I've heard people use the excuse that they just keep track of all of the different balances on paper, but honestly, that completely goes against the psychology that's discussed in the book. You need to be able to see these balances separately at the bank because it just does something different in your brain. So when you're opening up all of these accounts, I highly recommend that you find a bank where they don't charge any like monthly or annual fees for bank accounts. I know some banks out there do charge a monthly amount for business checking accounts, and obviously those fees can really start to add up once you're adding 6 or more bank accounts. So highly encourage you to find a bank where there are no monthly fees, just to make sure you're keeping your costs low. Once you have all of those bank accounts opened, Next, you are going to complete what's called an instant assessment to see where all of your money is currently going. And this is for you to take just a completely honest and objective look at your numbers in your business. And obviously, this step is going to be a lot easier if you have clean bookkeeping numbers to look at. So there's my little bookkeeping plug for this episode. But in the Profit First template I have linked below in the show notes, I've also added a tab there to help you with this instant assessment. First, what this is going to show you is just where your money is currently going. So remember, the numbers don't lie, so just let them tell the truth as it is. If you look at your financial statements from the past 12 months and 50% is going towards more inventory purchases and the other 50% is going to OPEX, then that's essentially your starting point. Okay, you don't want to make any drastic adjustments to start, like trying to drop your OPEX down to only 40%, because very soon, if you're only contributing 40% to your OPEX account, but really 50% is going to pay the bills, well, you're going to run out of money pretty quickly in your OPEX account. So obviously the goal is to help, reduce the amount that is going out in OPEX costs so you can start allocating to owner's pay and tax and profit. But that doesn't all have to happen and start on day one. You're going to start by making just small incremental changes. So I recommend to start if every dollar is currently allocated towards inventory and operating expenses, then just start by setting 1% aside into your profit account. And then start looking at your expenses and seeing, okay, are there any things that you can cut? Are there maybe lower subscription tiers on some of the softwares that you're using that can still get the job done, but it help reduce your costs? So just start taking a hard look at all of your expenses and see where you can start freeing up some cash flow. And then every quarter, again, just start making small incremental changes. So this quarter, maybe you're doing 1%. Next quarter, bump it up to 2%, or maybe start putting 1% aside in taxes. Again, it doesn't all have to change overnight, but these small changes over time will obviously eventually add up. So once you've completed that instant assessment, you're just going to plug in your starting percentages into the Profit First template that I've provided. And then every week on Money Monday, all you have to do is grab your income account balance and your COGS number, plug it into the spreadsheet, and the spreadsheet's going to do the math for you that tells you what amounts you have to transfer where. All right, so that's the basics of the Profit First method, both as kind of Mike explains in the book and then how I've added on the inventory account to help all of you boutique owners out there. And the truly beautiful thing about the Profit First method is that it is made to be customized for your business. So instead of just having 6 checking accounts, you can honestly open as many as you want to be setting aside money for other purposes. So maybe you want to have, be saving a little money throughout the year to cover year-end bonuses for your staff. Or maybe you want to renovate a portion of your store, or maybe you want to buy a new mobile boutique trailer, right? So the possibilities are endless, and this method is a great way to help protect whatever cash flow that you need to be saving for future expenses. But start with the basics. Start with the first 6 checking accounts and those optional savings accounts, and then just grow from there once you start getting into a good rhythm. If you need help implementing any of this in your own business, then I would love to chat with you. Please send me a DM on Instagram. I love the Profit First method. I love talking about it, and I would be so happy to help you out. But that is all that I have for you today. Be sure to tune in next week for another episode. I'll see you there. Hey there, and thanks for hanging out with me today. I hope that I shared something that helped you feel just a little bit more confident in understanding all the numbers in your boutique business. If you found this helpful, don't forget to go and leave a rating and review on Apple Podcasts. That's the best way for other boutique owners just like you to find this podcast so I can help them feel just a little bit more confident in their numbers as well. If you have any questions about what you heard today, hop on over to Instagram and send me a DM at Finding Freedom Financial. I'll be back again real soon, but in the meantime, go implement or take action on something you learned today. I promise your future self will thank you.